You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
Welcome back to the Option Block, everyone's favorite. I know it's my favorite. Hopefully it's your favorite bi-weekly source for all things options related. A little bit of options wit, some wisdom, some education, some UA, some of your questions, a little dose of strategy, and mix it all together with the peer into the future, and you get the heady brew that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding Options Insider Radio Network, up to 14, no, blowing through that, up to 15 programs on the network. If you want some futures options activity, well, we got you covered. If you want complete and total nonsense within a quote-unquote business context, we got you covered there as well. Check out wherever you find your favorite Options Insider Radio programs for This Week in Futures Options and the Business Show, as well as, of course, all of your archived episodes of the Option Block and every other program on the network. Easiest place to do that, you know the drill, theoptionsinsider.com. While you're there, click around a little bit. Look at some stories, some breaking news from the options market. Maybe leave us a comment, send us some feedback. We'd love to hear from you guys. Also, of course, find the radio, iTunes, TuneIn, Stitcher, Google Play podcasts. Wherever you get your shows, we're probably there. And if we're not, chances are it's probably something no one's ever heard of. But if that's the case, let us know. We'll see if we can get up there as well. And, of course, you can always grab our mobile app. Some of you wrote in asking why TWIFO wasn't in there, and now that's in there as well as the business show. So all of our 15 programs are available for streaming and downloading via the mobile app. And, of course, all the feedback stuff's baked in there as well. So you got a question, hey, what the heck's cooking here? What's going on with that? What's going on with this? Why are you guys the best things in sliced bread? Why are you guys the worst things in sliced bread? Let us know. We love to hear from you guys. If it's the latter, though, just send it to Andrew at OptionPit.com. All right. And joining me, speaking of the latter, joining me on the old program today, let's start off in the Duchy of Maine with the aforementioned receiver of all of your hate mail, the Rock Lobster himself, Mr. Andrew Giovinazzi from a little place we call around here, the Pit. Mr. Rock Lobster, welcome back to the program in this post-Brexit world.
All I can say is umbrage, 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 early and often, sending me those nasty cards and letters via email. I am well, though. The weather in Maine is quite nice. I don't think we've had any rain for about 5 days.
It's certainly
no rain in Maine.
Oh, that's nice. We have had a lot of rain. Listen to me. We've had a lot of rain down here in the southern studio. Yes, if I sound a little different, listeners, I am still on location recording from a secret undisclosed location, aka Orlando, where so we sound a little bit different. That's why. And we have had, as they are wont to do down here in sunny Florida, a nice bit of rain every now and then. Keeps everything green. You know, that's kind of how it rolls down here. It rolls through for about 5-10 minutes. It storms like crazy, and then it's done, and you get on with your day. Speaking of getting on with our day, let's get on with our show by introducing my other cohort here on the old all-star panel. You know him, you love him as the leading citizen of that beautiful hamlet known as St. Charles, Illinois, Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the old Option Block program, sir.
Happy to be here as always. Can't wait to get in our discussions of today.
Yeah, there's a few things on the docket. So I think without further ado, let's get right to it and launch the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block. This is, of course, the portion of the show where we break down what was moving, what was shaking, what was rocking, what was rolling in today's markets. And, even before we get to that, because we haven't had a show since the historic vote from last Thursday. So maybe before we even get to today's activity, which is strange in and of itself, let's get to some of your reactions, ramifications from the somewhat surprising, some may say, sucker punch to the marketplace. Of course, if you listen to this show or any shows on the network, we were all kind of saying maybe they're taking this vol off a little bit too soon. The vote isn't done yet. And then surprise, surprise, what happens? Bam, sucker punch out of left field and Britain's out. So let's start there. Maybe we'll start there. Uncle Mike, we'll start with you. What were your initial thoughts on the results of the vote, as well as the market reaction we saw, that maelstrom we saw in that ensuing, 10 to 12 hours or so?
All right, I'm going to quote something that I've quoted before on the show to start this off. People were saying that I was having a really good year trading until the Brexit, but who could have possibly predicted that? And I'm going to tell you who could have predicted that. The person who bought puts on the pound or was short the pound going into the Brexit. That's who could have predicted it. Folks, you always have to have some type of semblance for something like this to happen. And you can go back to the show. I didn't think it was going to happen. I was dead wrong, obviously. But I will say this in terms of the put spreads with which I was doing on the SPY, and I was on record saying this, I chose to go the route of being a live chicken rather than a dead duck, and thank God I did in hindsight. But with that, I was very surprised by it. It's a 52 to 48 vote. Percentage-wise, and just in looking at it, it looks like there's some talk about them possibly doing a second vote today. But then when the Prime Minister of Britain spoke, looks like that's not going to happen. So this is something that's a done deal, and it's going to be very interesting to see what exactly happens from this. What are the tariffs going to be? There's a lot to do on this, and it's going to take some time to figure out exactly what their trade agreements are going to be, who's going to be able to trade what with whom throughout Europe, that type of thing. There's a million different scenarios of what could possibly happen, but from a trading standpoint, folks, these are things with which you need to be prepared for and know that it can happen. Never fear the market. Always respect the market, because this can happen. I remember just watching TV Thursday night, just right after the markets were closed, and I thought, wait a minute, why are the S&P futures down 50 points all of a sudden? And I kind of figured, okay, well, maybe something's going on. So then naturally, like anyone else, I tuned into the various business networks to see coverage on it. And then all of a sudden, we're 5% down. The S&P were down over 100 points in the S&P futures that night. So it was something to where things like this can happen. Now, with that, I'll talk a little bit more about this in the strategy block, but I'm looking for points to get back into the market, because I do think this ultimately will be looked back upon as a buying opportunity. But I'm going to say this as well, not today. And so I'm officially in not today mode, but I am looking for some type of entry back into the S&P 500 in one way, shape, or form. With a lot of the stocks with which we own, a lot of them are hedged, and so we're not a huge concern with that. But just be prepared for stuff like this, folks, because it can and it does happen. The only thing that's certain in the market is that uncertainty exists. All right, now the Mike Tosaw cliche block is over. I'll turn it back to you, Mark.
I didn't realize we had added a segment to the show. It's interesting. We'll have to make a bumper for that, the cliche block.
It was very nice.
Yes, it was transitioned to very well. It's like you've been doing this for a while or something. But yeah, you mentioned a lot of that froth in the after hours, and it was pretty heavy for a while there. We saw the E-mini, I think, hitting what was at the time the limit intra-session low of about 19.99. Gold spiking all the way up to 13.62 before finally giving up. I believe about 40 handles of that in the actual trading a little bit later. The pound dropping about 10%. I forgot how many years of a low that is, if it's either 16 or 30 or something crazy, but many year low in the pound. So It's been pretty fascinating to watch this, and also a little bit terrifying. Mr. Rock Lobster, same question for you. What were your thoughts there in that initial just maelstrom whirlwind and kind of the initial outplay of the Brexit there last week?
I was hedged basically. I sort of was like a little backspread. I was kind of short vol going into it, but eventually got to be long vol, so it ended up being kind of a zero. So I actually went to sleep, figuring, I'll wake up tomorrow and see what happens. But the way that it worked out, I think it was a surprise, and I think the market is surprised. And right now, one thing we say on the show is there's a lot of uncertainty out there, and the market has a hard time rallying under uncertainty. So to the extent that things start getting done, I would say like items off a checklist, okay, what is the trade going to look like? Are banks going to stay in London? How are property values in the UK? Just like as some of this stuff starts to become more known, we'll probably see volatility start to subside a little more. But I mean, basically all the banks, all of the UK, like let's say Barclays, Deutsche Bank, like European banks, English banks are, they're basically trading at like smoked lows, like they're not going to be in business anymore. So, I didn't see the memo that all commerce stopped. There were some rumors about counterparty risk because, of course, a 10% drop in the pound is pretty huge. I don't know. It kind of feels like a buy opportunity. I'm looking at some of that stuff saying, well, really, how? I guess, anything can go really low. There's no limit on the dollar pound. It can keep going and going and going forever. But, I mean, ultimately, I think what happens is it's a big unknown, and it takes a while. It's like volatility is like a hand grenade. It goes off and boom, and it shatters everything at the beginning, and it takes a while to kind of be able to build things back up, as in vol coming down, right? Because it blew up. But you see today, and you see market down, VIX down. I think there's a lot of profit taking. A lot of people that were long puts are taking it. In the not too distant past, if stocks are down 1.75% and VIX was down, 2.5 points, you would say, well, wait a minute, what's going on? So because we didn't have the massive follow through, I think some of the premium and volatility came out. Vol was down in the vol products today, albeit from a very high level on Friday. Normally, if that rumor had more truth to it about bank default or counterparty risk or something like that, you would have seen that vol really get bid up, I think. And it didn't, at least we haven't seen it yet. So again, I'm not taking any overt vol position at this point. I think we can go either way. Vol could keep going up if more uncertainty gets thrown into the mix. But I think at this point, they're going to start voting. They're going to having dates. They're going to start, whatever. All the lawyers and bureaucrats are going to come up with whatever they need to do. And now apparently the EU, and I guess this is a classic quote. The EU defense minister, or whatever this person's position is. Again, it's why the English kind of left, and and there's huge social media debate on this. But all of a sudden, you got the reason I think why this EU minister just declares that we're going to have more cooperation and more policy and more this and more that, and I guess that was part of the whole problem, just because one person that's not elected can just say, well, we're going to start doing this now. So I found it kind of funny that the whole reason they left, now we're going to get serious about whatever. I can see maybe why. There's lots of stuff on social media about most of the people who voted for Brexit didn't know what it was. I mean, I guess people are that uninformed.
Yeah, that's been the big trending topic of all the Google searches for what is EU, what is the Eurozone, what is the EU, what is Brexit from Britain after the vote.
Yeah.
Always a disconcerting thing to see. I mean, some of that certainly played out of proportion, but still, yeah, interesting stuff. It's been, the thought process, the reasoning behind the vote, that's certainly been debated quite a bit. It seems like a lot of it at the end there was clearly driven by the social issues more than the economic ramifications. There was a lot tied into this, more than just, Britain's economy with all the rest of the EU countries. There's immigration, a lot of other things that touch on a lot of other hot points aside from, what's going to happen to the pound, what's going to happen to British tariffs and things. And so that stuff seemed to win the day at the end, even though it was very close. And it seemed like for a while there going into the vote, hence the massive vol crush last week. Still one of the worst time trades in modern history, up there with Soros buying all those tech stocks in like February of 2000. Is all the people who dumped vol last week on the strength of one poll coming out of the EU, and all of a sudden the whole thing was done. But people clearly underweighted the impact of the social issues and how much of a driver that was for people, and clearly the social issues not exactly lining up with what people wanted to see. Speaking of lining up, well, first off, speaking of surprises, I was looking at our question of the week from last week, and clearly this surprised our audience as well. We asked our audience last week, our question of the week, as the Brexit vote looms, how do you think Britain will actually vote? We gave them 3 choices, yay, nay, and I'm sick of Brexit. I don't know if you guys had a chance to hit on this last week. What do you think won the poll, Mr. Rock Lobster and Uncle Mike? We'll start with you, Rock Lobster.
Oh, I think exiting won. I mean, no, not exiting, staying.
Staying? Okay. What about you, Uncle Mike?
Same.
Okay, you're correct. 43% of our audience voted nay, so clearly we're in the minority as well. 28% said yay, and even about statistically tied 29% said I'm sick of Brexit. So, and that was before the vote. Imagine how sick of it they are now. And if you are one of those people, I apologize, but we kind of have to talk about it. It's kind of the order of the day, the big news of the day. And let's fast forward to that, kind of like you touched on, Mr. Rock Lobster, some of the impact. We're still seeing the fallout from this in today's markets. We are recording this, of course. Unfortunately, no live stream. For those of you missing the live stream, I apologize. But again, I'm not sure if the connectivity of the remote location here will handle it. All you people diving into our chat room at once. We'll be back in next week with more live shows after the holiday. The market selling off today, June 27th, right a little bit after closing here, 4 o'clock in the East Coast, a little after 4. And the S&P off nearly 2%. The Q's off about 2%. The Dow, the laggard, only off 1.5%. And guess what? VIX cash also off about 2.3 handles. It was off nearly 10%, over 10% at one point. So a lot of people were really up in arms about that today. I heard some talk of maybe some technical issues with the VIX going into it today. A lot of people also saying that some big funds were still aggressively short a lot of VIX futures, and they were leaning on this quite a bit today. I can't remember. In fact, I was looking at some stats before the show, and I believe it's been since about 1990, August of 1990, since we've seen a similar move like this in the VIX. And of course, that didn't really happen at the time because there was no VIX then. This is all kind of back data that we're applying that to. But still, very, very weird stuff. Mr. Rock Lobster, maybe we'll start there because that obviously caught your eye today. What's your thought process on this crazy day, crazy sell-off in the market, and yes, VIX cash unloading aggressively to the downside today as well?
I think it was a result of just profit takings, just traders selling call spreads, selling their index puts. You remember the Nations guys? The Nations, they have the SDEX, those vol products.
Valdex, and it was VIX without the skew, effectively.
Yep, and it's a good, quick, and dirty way to see what's going on with the skew. The SDEX was down substantially today after going totally nuclear on Friday. So from a really expensive level. I guess my big question was, skew came in. Skew comes in, all the Vega that's weighted down there, all the out of the money puts. VIX goes down, and what basically that's saying is there was not an expansion of that downside vol today, even with the market down. So I think, they priced it in, they priced the market to go down, but we didn't get a 5% move. We got a less than 2% move. So that's kind of priced. So if it's kind of priced and all of a sudden nobody wants to buy puts anymore, that's the one thing. Think about it. European market was down 10%. More of these English banks are down another 10, 15% today, 20%. They just crushed them. Just boom, crushed. They opened, everything crushed, and it just stayed there. So without the real follow through, and there's a couple names like Tesla was up today, AT&T, stuff like that. So it wasn't, a total. There's definitely a sell-off. We've seen a lot worse sell-offs. And like I said, now everybody's I think they're going to start looking at the calendar. What's up next for the English? When are they going to start seeing how bad this really is? What does it really mean? Do they cobble together another referendum? Because everybody's Googling what Brexit is or the EU. Oh my gosh, you can't write this stuff up. Make this stuff up. But
you can't.
And really keep an eye on even actually the vol futures on a day like this, because I know we always talk about, but every vol product was down today. Actually, they're selling off pretty hard at the end of the day too. Here it looks like too. So, and we'll see what happens with all that. That is, that's basically the bottom line. They kept selling stuff off, and we'll see how long that goes.
And
as far as I can tell.
Oh, sorry. And Uncle Mike, same thoughts for you here in the wake of today's somewhat puzzling activity. What are your thoughts here in today's activity?
Well, I would definitely agree. I mean, if it's when you have as much vol as what we got on Friday, it's not surprising in terms of what's happening with it, but we could be in for scooping up some more tomorrow. Right now, just looking at charts, S&P's down about another 6 points from the close, and could have some more rough waters coming in tomorrow. So that's what I'm seeing on this at this point.
Yeah, speaking of impact there in the broad market, we also saw a lot of other products taking it on the chin. Crude took it on the chin last week, getting slammed again today. WTI off about nearly 2.5% after about 5% sell-off last week. That's the biggest drop we've seen out there in WTI in about 4 months. Similar moves out on the Brent side of the space. Of course, you have the Brexit weighing in on it on the top of some supply coming back on the market from Canada, or it seems like it's about to, as well as some other developments in Africa that may speed up some supply hitting the market. So it seemed like a 1-2 punch here for WTI and Brent. We'll see if that continues. Of course, the dollar looking pretty robust right now against a lot of currencies out over there, particularly, of course, the pound, which is kind of just had issues, shall we say, of late. And, surprise, surprise, guys, how much have we talked about Miss Yellen and her crew popping their heads up out of their hidey holes since really Q3 of last year. So we're coming up on 9 months of this nonsense now, and for all of this Sturm and Drang, we got a measly, I think a 25 basis point hike or something along those lines back at the end of this last year. It seemed like it was done just to do it, and then of course they were threatening of doing it just a week or two ago, and now of course post Brexit, we're in a little bit different world. And guess what? Guess what the new conversation is? Yes, if you said rate cuts, you're correct. That's what the new debate going on out there now is. What if they reverse course? I don't see them doing this because that would be kind of an admission of all sorts of failures on their part. But the probabilities over there from our friends over there at the Fed Watch from CME, the probability of an actual 25 basis point cut spiked dramatically after Brexit. They were both effectively zero just going into the vote. Now about 6% for July and a much higher 17%. Still pretty low, but they were all effectively zero going out through the end of the year. And now all of a sudden, guess what? Maybe a cut's on the table. What do you think of that, Mr. Rock Lobster? Does the diehard libertarian in you, particularly on market issues, does it just cringe when it hears about this kind of potential Fed flip-flopping?
Oh, the Fed's flip-flopping?
I know,
oh my gosh. It's like listen, they still should be raising rates. Screw it. There's no reason why rates should be this low. I mean, you know what's funny? Europe is still a pain in the butt. They've been a pain in the butt for 100 years, right? World wars, all this kind of stuff. You got the commies after that. Now you got the EU. They just can't pull it together. I'm sorry. They really get it together. I just what are you going to say? Really? What are you going to say? I love visiting there. It's an awesome place to visit, but oh my gosh. It's just and Yellen thinking she's going to raise rates while every country in the world has zero or negative interest rates. I'm just
there's a certain amount of hubris in that, is there not?
well, everybody keeps saying, this vote was a blow for globalism and a blow for togetherness and and whatever. But why are we trying to fight the trend? I mean, I can see Yellen. Maybe she's trying to lead everybody, saying, these zero interest rate policies are folly. You need structural change. So I can see the reason why she might be doing that. I don't really know if that's why, but it's just I'm sorry. It's at this point now where it also what's funny is it's like it's self-imposed chaos. I think the EU, this whole migrant crisis brought all these other problems, and it's all just we're just going to do all this and we're not going to think about the consequences because whether you're for it, against it, whatever, I don't think there was a lot of thought into some of these policies. And especially after the financial crisis, just all of the issues with the Eurozone in general. And there's a lot of strain on stuff. And I don't see how we're raising rates, except that we should just get on with doing it and stop looking at every news snippet means we're not going to do something. It's like, I don't get that policy. It doesn't, it's just like rates should be going up because the economy is growing and it's not as growing as fast as we have. And there's all kinds of reasons for that. I guess people will debate it, but it's just, okay, that's the policy. We're going to raise them. Yeah. England's going to leave and then everybody will work out all the details and then we go on. I think the Fed would do better if they just stayed the course. This is what we're going to do. And, because we just don't think it's as bad as everybody thinks. And ultimately they'll probably, and that's, I think, what it'll end up being, unless somebody does something really stupid in the short term. So like keep flip-flopping on interest rates.
Speaking of stupid, let's get to some of that stupid stuff because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome back to the Odd Block, the portion of the show where we take a little sojourn down the back alleys of the options market. You never know what we're going to find when we head down those back alleys. Sometimes it's very dark and dubious behavior. We're actually going to start off looking back down an alley we first explored so intrepidly back in April. I believe the actual date was April 7th. If you recall all the way back then, listeners, we were talking about an interesting longer-term upside call vertical in Crown Castle International, ticker symbol CCI. This is the name that at the time was trading about $86. As of today, it closed at even the day when the market selling off aggressively. CCI up to the tune of nearly a 1% on the day, closing at $97.18. So obviously been a pretty favorable run for this name. This is the name that does about 1,800 contracts a day, only doing 1,300 today. But today is not where we're looking. No, we're going back in the rearview mirror to April 7th and a day when we saw 10,000 of the Jan 2017, so longer term, par 110 call spreads going up. Looks like paper buying these bad boys for doing it for 75 cents, 85 and a dime. Doing it 10,000 times. And now let's fast forward. At the time, we kind of wondered if our friend there, if it was a good bet. This thing had seen better days, but they were a little bit behind them now. I said at the time they were trading about $86. This name had traded as low recently as about in the mid 70s. So this thing had clearly seen some lows. That was, of course, back in the crazy days of the beginning of the year, back in January. Of course, back in September of last year, it also traded around those levels as well. So it was not unheard of to be substantially lower. The par 110 seemed a bit aggressive, and here we are, fast forward, not even that long, fast forward about 3.5 months or so, and actually about 2.5 months here. It was in April. And we see this call spread going from about 75 cents. It's about 3x now. It's somewhere in the 240, 250 range, depending on how you price this bad boy out. So our friend here, clearly his optimism was warranted, Mr. Rock Lobster. And looking here at the open interest, still about 12,500 open on both strikes. So clearly our friend is still open. He's saying, you know what, even though we're almost at my lower strike, I'm not rolling. I'm not closing. I bought Jan for a reason. I want to sit on this bad boy for a while. So clearly he thinks the bullish days are not yet behind them out there in Crown Castle International. I don't recall our commentary at the time, Mr. Rock Lobster, but I think we probably would have looked, knowing us, I think we probably would have said, this is an interesting, a bit of a swing for the fences. And lo and behold, a few months later, those fences are now nigh, sir. What you take here on our friend getting what he wanted pretty well, 3x or so here in CCI.
I think the guy's timing was good. It was, when you're buying out of the money calls like that, you generally want to go farther out in time, just because, you get a shot. More things can happen, like the English leaving the EU. But I think the simple rule, probably Tosaw agree, is, don't sell an option for 10 cents. That's, 8 months away. Don't sell that for 10 cents.
Yeah, he's probably regretting the upper side of that vertical now, is he not?
Don't sell that for don't sell options for under 15 cents. Just don't.
Is that a Rock Lobster rule of thumb? If it's below 15, what's a good rhyme for that? If it's below 15, it will be mean to your portfolio.
If you're below 15, I mean, it's like, okay, so you have to a couple of commissions, and it just ain't worth it. Just ain't worth it. So just don't sell them. So other than this person doing very well on the spread, that's all I would say about that. I remember that was probably the complaint, because they did look at this trade. I think it was making new highs when they bought it, and they look incredibly correct. So
that's a good way to put it. Incredibly correct. Yes. It has worked out pretty well in their favor. They're hovering at pretty much the lower bound of that vertical, which is always a nice thing when you buy, about 7-8 months ahead of time and it hits it within 2 months or so. That's not a bad thing. There are definitely worse ways to roll. I would have expected maybe this guy would have rolled out of this or closed out some of it by now, but he's still sitting on it, Mr. Rock Lobster. So clearly he's thinking more good times are ahead. What about you? Would you have I probably maybe at this point probably would have pared some of this down. Would you have done so as well?
I would be giving them some of this right now, especially with what's going on in the market.
You got to give a little bit back just to wipe out that outlay, and then the rest of it's gravy, right?
I think so, but
what do we know? We've only been doing this for decades. What do we know about this nonsense?
We didn't buy the spread in the first place.
That's true. We didn't. That is words of wisdom. See, you're full of pithy wisdom today. When it's below 15, don't sell it. We didn't buy the spread in the first place.
What's another thing which is funny is it's a REIT, right? So you would have think that when the guy bought this thing, with the interest rate environment, it was a pretty gutsy purchase. But maybe he's just like, they're not raising. Apparently they faded it all the way to the bank, although it is not closed yet. It is looking quite promising. Let's put it that.
Pretty good here. And here another day when the rest of the world is selling off, and he's still got some more upside to go. So he's laughing all the way to the bank. Speaking of laughing all the way to somewhere, I'm not sure where they're laughing because some funky paper going up today, Mr. Rock Lobster, and a little name you and I are familiar with. Most people I think out there have heard of. They perhaps tithe to it every day in the form of about $5 for a latte or so. This is, of course, Starbucks. Good old ticker symbol SBUX, SBUX. Having some, shall we say, funkalicious, to use a technical term, paper out there today. This is the name that typically does about 29, nearly 30,000 contracts a day. So it's still a pretty robust volume leader, certainly about 1,000x of what we usually talk about here on the Odd Block. Today, doing a whopping 70,000, Mr. Rock Lobster, about 4.5 to 1 calls over puts. We were talking about this a little bit ahead of the show. Let's walk through what the heck did go up out here in SBUX, because it was a wee bit funky, was it not?
It was a wee bit funky, and I was trying to kind of parse it because there's a lot going on. So it looks like it was the July 22 weeklies. It was 55, 56, 56 and a half. Okay. There is substantial open interest on the 56 and 56 and a half. I think, somebody might have been trying to ride some Brexit goodness. There is an unconfirmed earnings around the 21st, so which makes this trade really touchy as far as being it was kind of close to the money. There was 15,000 open on the 56s, and there was 8,000 open on the 56 and a halves. So it looks like they were long those. They sold them out, and then they went in and bought the July 55s. That's what it looks like. It was 20,000 contracts net on the sell side, it looked like, and it looked like a little over 20,000 contracts on the buy side. So it appears that they are they want to stay long Starbucks. That's the simple answer I have. They want to stay long it, and they're hoping that this strike stays alive through the earnings cycle, which, just looking at the earnings history, let's see here, the July 20, I'd say it's close. It's possible that they could get stuffed on this strike by missing the earnings cycle. So it's a touchy one, I have to say. It's not my it's a little close to the vest for buying that kind of juice.
Yeah, funky all around. Timing, strike selection, size-wise. Lots of funk going up here in this here SBUX. This is kind of a bit of a late-breaking one, so we don't have it up on the site even, maybe, so we'll put something up on it later so you can follow along with it, listeners, as we were kind of parsing it going into the show ourselves. Always fun to have some late-breaking funky paper, as well as a little bit of a look back. You guys are always asking us, what about this paper, what about that paper? Well, we like to give you guys a chance, a little bit of look into the rearview mirror. Sometimes they don't work out so well, as our friend a couple weeks ago we talked about, who bought their effectively dailies in Xilinx, didn't really work out so well. This friend here going a little bit longer term, and surprise, surprise, knocks it out of the park. So pretty good stuff there. Pretty good stuff all around, but it's time for us to keep on rolling. It's Monday, listeners. That means it's time for the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. You guys know the drill by now. This is the portion of the show where Uncle Mike steps on down from the mountain stone tablet and smoking pipe, bubble pipe really, in hands, and smoking jacket to dispense some options, wit, and or wisdom. Uncle Mike, I checked in with my minions before the show. Actually appropriate, because we were watching the Minions movie just the other day again. So they were all kind of gathered around for that. They love that movie. Surprise, surprise. And they're mentioning to me right now, actually, they're kind of gesticulating to me. It's kind of hard to tell because I'm not sure if you know much about them, but they're not very good at mime or charades. But it seems like they're grabbing their neck. So I'm thinking maybe you're going to do something with like shirts and maybe how to pick how to pick the right collar size for your dress shirts at work. Am I correct there? Are they right? Did they earn their jams and jellies today?
They did. They were a little vague because you could have interpreted that as the strangle as well.
That's
but
true. That's true.
I gotta give.
But I know you're into shirt sizing very much. It's kind of a hobby with you. So I kind of figured I'd go that way.
Yeah, very true, very true. You just remind me of a story from a couple of years back. I've only spoken with an interpreter a couple times, with a sign language interpreter, and so out of the corner of my eye, this is when I was working for Options Express, and I just was doing a demonstration about the strangle, and all of a sudden I see this person just choking them, making the motion of choking themselves and really getting into it. So I have to confess, I did have a little bit of fun with it. I said, and now the strangle is something that you always want to do. And I said the word strangle probably a few more times than I should have. But then after that, I went on to talk about how market makers aren't necessarily big monsters, and then showing these monster signs and things like that. And it was quite a fun time at an event back in DC back in 06, but I digress. Anyway, right now, going into this Brexit stuff a couple of weeks ago or whenever it was, I was flat on gold, looking to get catch on a pullback, to get back into it, so to speak. Long story short, that has not happened yet. So, and it went the opposite way. So I did miss a little bit of this gold rally. So question then becomes, and this is something that, what does a real trader do? Not someone who always talks about, oh, I won this, I won that, I made money here, I made money there. This is the real deal of something to where you missed out on something. How do you get back into it? So with that, I'm looking at gold right now, and I do like it. I am bullish on it over the course of the next year. I'm bullish long-term on it as well. Just trying to be careful with it at this point is my philosophy. So how can I be careful with gold right now, get back into it, but then not feel totally stupid if it goes right back down if I'm getting into it? And what I want to talk to you about today is the knockout collar. Now, first off, what is a knockout collar? Let's go through it and give you an example. Just on my old friend XYZ stock. XYZ stock's trading at $100 per share. And I am concerned. I want to get in on XYZ stock, and I think it's going to go from 100 to 110, let's say. But I'm also kind of concerned with it going down to 90. And I'm not too concerned with it going to 0, but I could see it going either way in the near term. So with that, that's where a knockout collar would come into play, to where step one, buy the stock. Step two, and actually you can do this all in one order ticket, but let's just go step by step because we're doing several things at the same time. Step two, sell a covered call at the 110 level for, let's say, $6. Step three, buy a 100 put for $9. Now at this stage, you're paying a $3 debit because of the fact that you sold a covered call for $6, but you bought an at-the-money put for $9. Now, the next step as to what you can do with this to make this an even money trade would be to sell the 90 put for, say, $3. Once again, don't read too much into these numbers. I'm just kind of making them up as I go, or I am making them up as I go to kind of give you an idea of it. But the concept then becomes to where, based on expiration day risk-reward graph, and the only reason I'm going just expiration day is because I want to keep it simple to start with, and I'll talk about what to do before that in a moment. But based on, if you do absolutely nothing until expiration day of that scenario with which I just painted, if XYZ stock stays the same, your trade will stay the exact same. However, you will lose money on commissions. All the options will just expire worthless. XYZ goes higher. You will have upside between 100 and 110. You'll get to participate on all that upside. So if it's at 107, you get 100% of that upside between 100 and 107. But anything past 110, you don't get to participate on. So that is how it would work if XYZ were to go higher. Should XYZ go lower between 100 and 90, you have a protective put. The protective put is valid from 100 down to 90. You would have absolutely zero loss between 100 and 90. However, anything below 90, you will have a 100% loss, dollar for dollar. And by 100% loss, I mean the options won't save you any past 90. So if it goes down to 89, you lose $1 on the stock, you'll lose $1 overall. The options won't protect you any further because it is below the 90 level where you sold the put. You are knocked out, in other words, hence the reason a knockout collar. So with that being said, if you have a situation like what I have right now, and this is the real deal, folks, I missed out on some of the gold rally. I missed out on the gold rally over the course of the last few weeks. I was selling puts against it, but I missed out on a nice little pop. I believe that gold is going to continue to go higher, so I want to get back into gold. what I'm looking to do and what the numbers are, I'm constructing that over the course of the next couple of days. I don't have an exact feel for the numbers, but what I'm looking to do is get it to the point to where step one, I make it as close to an even money trade as possible. The credit I get from the covered call will finance the cost of the put spread. Step two, I want to have it set up to where if it goes below where I'm knocked out, I want to be fine owning GLD anyway at that price. Meaning, okay, well, if it would have gone to this level, I'd have bought it at this level anyway. So that way I know that that's where I want to go with it. Now, here's the next question. Typically, I can't even think of any, in all the thousands of options that I've traded in my life, I can't even think of maybe once or twice that I let stuff like this go, knockout collar go till expiration like this. I can't even think of one that I have, quite honestly. But what do we do in all these scenarios before expiration? So let's say that I get into this knockout collar tomorrow and all of a sudden it goes above my short covered call strike price. Well, if that's the case, I then need to make a decision. Do I roll the call up, become more bullish, roll up the call and the put spread? Or do I do nothing? Let time decay have its effect on it, because you're not going to be at the full profit right away. Now, what's my plan for that typically? In this scenario, I would probably roll up the whole thing just because of the fact that I'm quite the bull on gold, and I probably would roll up the call and the put spread. Now, is that a guarantee that I will? Good gosh, no, but that would probably be my first inclination. I've talked about how I did that with Apple many, many, many times on this show a couple years ago. That's kind of what I would be looking at to do with GLD. If it stays the same over the course of the couple days, fine, I would do nothing. If it goes down within the realm of the put spread, I would do nothing. Where I would start to make a decision would be if GLD went to the point to where it was past the knockout level. Do I roll the put down? Do I take a profit on the covered call? What do I do? Those are some of the scenarios with which I would use as my lines in the sand. Now, what do you exactly do when that happens? Hard to tell beforehand. So that's why you have to have kind of a general idea of what your goal is, but you can't be bound to anything, because let's say volatility totally changes on GLD, or what if it happens tomorrow versus what if it happens 3 weeks from tomorrow based on time decay? You never know exactly what it's going to be, but you can have a generalized outline, and that is mine for right now. And that's what I'll be getting into. Most likely, can't say for sure, but most likely over the course of the next few days, I will have a trade like that on GLD. And on future strategy blocks, I try to keep people abreast of what I'm doing with the SPY strategies that I'm doing. But this is the one that I will, in addition to SPY, be giving you guys guidance, giving you guys updates on as to what I'm doing within the strategy blocks. With SPY right now, going into Brexit, I chose not to mess with it. Thankfully, I'm glad that I did at this point, but right now I am looking for some type of buying opportunity with the SPY aggressive call spread strategy that I do. Whether I get in with a call spread, a put spread, whatever the case may be, I don't know, but I just know that for right now, the answer is, are you going to get it back in? I go, yes, but not today. I've looked at a few things, but I don't have anything kind of ironed out to see how I want to do it as of yet. And then with the hedge that we have on being long SPY or long the hedge strategic night strategy, we're still well above the 185 mark in the which is where the knockout is on that strategy. So nothing to do as of yet, but should we go down to the low 180s, or 180 would probably actually be our actual line in the sand there. We'll do the roll that we talked about several months ago, but until then, we're just going to sit there and enjoy having a protection in on it. So in all of this chaos, somehow the sun's still going to rise tomorrow, I bet. Life's still going to be good. And that is the strategy for today from Mike Tosaw.
Thank you for that, Uncle Mike. And you did invoke Apple in there. We got a couple more minutes here on this Brexit edition of the show. So let's do a quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. And like I said, Uncle Mike invoked Apple. That means we have to answer this question. It's kind of a timely one. This comes from David Shanabrook. And he wrote actually last week, but I think it's still, I was playing around a little bit while Uncle Mike was detailing his knockout collar, looking at some of the numbers, and it still applies to this week. He writes, can you check the Apple weekly options for this week? Huge open interest, both put and call, at the par 105 and 105 strikes. And he puts question mark, accelerated by repurchase by Apple. And then he puts the effect. That's what he wants to know. So is this happening still? And I didn't have a chance to pull up the numbers for last week, which was when he wrote it in, but I was looking at the numbers for the weeklies right now, and he still is correct. There still is a lot of action, particularly if you look in the weeklies. The strikes that just leap off the chart to you are pretty much the par strikes, and not 105 strike to a degree, but like there's 2,300 of the 99 halves open, 23,000 of the par puts open. Same thing on the calls, about 22,000 on the calls. So there could be a lot of factors at work there. We see similar levels of OI in not so much in the week 2 weeklies, even though the pars do lead. There are about 6,000 contracts there. A bunch going up today, by the way, about 4,800 going up on the par puts in both the front week and week 2. And also in the regular old July, the par strike is leading the charge as well, about 30,000 open. Again, about 8,700 of those puts going up as well today. So some funky action going up in Apple today in the weekly options. But I think this is a confluence of a lot of effects. First off, there could very well be the firm in on that. They could be writing the puts to get long there. They could be doing synthetics because we're seeing similar amounts of OI on both the puts and the calls. So that does tend to the lead that there is some link between the two. So they could be using the synthetics to get long some stock at that par strike. If they're buying it at the par strike, that's a pretty aggressive level. They could have gotten better but again, the firm's got a lot of stock to buy back, so they don't mind maybe dollar cost averaging a little bit. I think also there's something to do with just this effect of these round strike levels. People really seem to gravitate toward them. If you're talking people, where do they want to buy in at Apple? Well, probably if it's a trading 115, maybe around 100. Very few people are going to say, I want to buy in at 99.5. So they're going to come in, they're going to write the par put, and they're going to do that instead of the 99.5 puts. I think it may be a confluence of events, too. Uncle Mike, you mentioned Apple before. I know you've kind of been busy with GLD and others, but what are your takes, A, now that Apple back down at these 92 levels, and then B, have you noticed this kind of confluence of weekly paper around the par strikes, and what are your thoughts there for our friend, what was his name, David Shanabrook?
Yeah, with Apple in the low 90s, I'd love to say that it's a buying opportunity for Apple, but right now would be a wonderful time for them to introduce a new product in some way. And I think if they did that, something innovative, then this would be the buy of the century on Apple. But until they do that, Apple's just kind of a trading stock or something to just maybe if you want to buy the low, if you're really an aggressive trader, maybe buy some Apple right now and hang on to it till it meanders up to 100, 105, something like that. But would love to get back into the Apple, get back on the Apple train. But until we get some more innovation, I still don't feel the need to do that to the levels with which I was once at. Now, yeah, we have it. Some exposure to Apple. I'm not going to deny that, but compared to the levels with which we once did, it's nothing. In terms of the strike prices, yeah, I would agree with you, Mark. In a lot of ways, I think that's the round number effect. In that, if I'm just talking to clients, and if this was from having Apple at 100 or protecting it at 100 or whatever the case may be, a lot of times you see that. It's easier for clients to understand in a lot of cases, and just seems like a good round number. We as humans like dealing in round numbers, and I think that's, from my standpoint, I think that's probably one of the main reasons with which we have that type of paper.
Mr. Rock Lobster, do you concur here, or do you think there's something else afoot here? All this paper mostly on the par strike, to a lesser degree on the 05 strikes as well.
I believe in the law of even numbers, like Mike was saying, just market psychology. People like that even number. And Apple, if they were doing employee purchase, they'd probably write puts. They're going to buy the stock anyway. I mean, they'd be writing puts. I don't think they'd be writing in the money puts. I think they'd be writing out of the money puts. So, because that would be free money then for them, because they got to buy the stock anyway. So, that's generally, when you see a lot of action there, that's how I look at that. That's how I look at that. At that trading action. But usually they sell puts, they don't buy calls. stock.
Yeah, that kind of looked a little odd to me, but there is a lot of symmetry on the OI, particularly in some of those the week 1 stuff. So maybe something funky is up there. Maybe someone working some combos or whatever the heck Rock Lobster calls them in his old school terminology over there on the bar strike. Either way, we got to keep rolling up to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. It's been a heck of a week. It seems kind of antiquated and dated to even talk about earnings when so much other tumult is in the marketplace. But if you are so inclined, we got Nike for you tomorrow. I believe they're after the bell. It might be before. We'll have to check in there. So there are a few names still reporting. Of course, that market mover, Pier 1, on Wednesday, so you still have a few names for you guys to play, but really at the end of the day now, it's kind of all the fallout from Brexit. It's going to be a lot more fallout, as we said on Vol Views last week, actually, in the immediate aftermath of the vote. The market is attempting to price all this stuff in when there's so much still unknown. It's going to take years for all of the devil in the details to be known of this vote and how Britain's going to pull out and if other countries are going to follow suit and which model of exiting they will take. So there's a lot that still needs to be worked out here. I don't see much else overshadowing that, at least for the rest of this week. But that said, let's start with you, Uncle Mike. Anything else you're watching for this week?
Yeah, I don't see how anything can really be resolved this week. Nothing from the Brexit should be new news in theory this week, meaning that unless they change their minds and vote again, I don't see them saying, "Oh, looks like they're working on a deal with France, or they're working on a deal to trade with Spain, or Germany, or whatever." Because there's news about Merkel and the prime minister of Germany and the Prime Minister of Britain working something out. That in theory should not move markets, because we're not going to know anything for sure for, like you said, another 2 years. So I think right now the main thing to watch is just the downward momentum with which we have. We're about an hour after the market closes today on June 27th, and we're down about 9 points in the S&P from the close. So I'm just watching the downward flop and saying, well, not today.
So you heard it in Uncle Mike's words. Brexit will be resolved by weekend, so look forward to that, listeners. Mr. Rock Lobster.
You love getting even with me for telling the world how you're such the stupid lover.
I do like that, and it is my prerogative, since I do sit in the big chair. I get to turn the narrative however I like. All right, Mr. Rock Lobster, what say you, sir? Are you also in agreement that Brexit will be resolved by weekend?
Yeah, by tomorrow, I think.
Oh,
I think
it's even better.
You gotta. Yeah. I think what will happen is when the vol will start to subside, when you start to see things pop up on a calendar, like, the British are crossing this off the list, they're crossing that off the list, they're crossing this off the list. As soon as you start to see some information coming out about how they're going to deal with it, that's probably when we start to see things normalize. Although right now the market, the volatility is bid for basically a lot more movement. So what the heck? It's bid to move, and the market can keep moving around 1.5% per day, and vol doesn't even have to go up. We could just stay volatile for a long time. And like I said, I don't think we could become – I still think we're going to have a lot of intraday movement until they start to sort of get their heads around what they need to do, and all that news starts percolating out. And also just look at the long bond. I mean – the ETF, the TLT, is trading at levels it hasn't seen since the financial crisis. And I mean, besides just everybody worrying about what the British are going to do, do rates really need to be that low? But I know Yellen doesn't want them that low, but yet she has them there anyway. So just, follow bonds. Until the bonds break, I don't see this crisis being over anytime soon.
All right, but what is over, unfortunately, is this episode of the Option Block. But really quickly before we go, let me check back in with my cohorts, my partners in crime, see what they have cooking. Mr. Rock Lops, I know you guys have an event coming up. Dish it for our listeners, sir.
Yep, Trader Summit, July, what is it? What is those days? It's the 20th, somethingth. I will be in Chicago the week of 18th to the 22nd, to vet our clients and basically have a good time and go raid the Options Insider Network studio and drink some of those tasty beverages and see some Cubs games and talk trading with a bunch of industry insiders.
Always fun to be feted, or as the British say, fated. She'll be fated. That sounds more dire. So we'll go with the English first, the American first. Mr. Uncle Mike, what's cooking with you, sir?
Well, if the Brexit is something that you're curious as to how to trade, whether you want someone to manage your money or whether you just want someone to talk to and you're trading your own money, call me, folks. 312-212-3531, or send me an email at m2saw@rcmfs.com. Don't be a coward in this market. Now, does that mean jump in all the way? Not necessarily, but never fear. Uncle Mike is here.
I like it. Put that in your business card. Not only will I roll your puts for you, but Uncle Mike is here. Maybe a little Mighty Mouse on it. Here I come to save the day kind of thing. I could see that going with you. And who knows? I think the copyright lawyers wouldn't catch up to you for at least a couple of years. You got a few years of runway before you got to pay some fines. But it sounds pretty good. Check him out, as well as, of course, if you're going to be in Chicago, register for that event. You get to see us live, which is always fun. And we'll see you guys next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.